The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 21st day of November. And happy Thanksgiving to all of you. Certainly a great holiday, one of my faves. Absolutely no pressure but to eat the turkey, have the stuffing, mashed potato gravy. I mean, come on. What else do you want? All right. Let's look at the market. Dow's up 131 at 24,599. We had a Chapman wave trend gauge flashing yesterday, which suggested there should be a 9 to 11 point rally in the E-mini within 2 days. And that should help the market at least find some support. Very oversold condition. However, the low today of 24,533, that just doesn't cut it very well. 24,368 yesterday. Let me just put that in here. Gray B, 24,368. So that says to me a couple of things. Number one, that there's a really good chance that this arch formation is not done yet. Number one. Number two is that the weekly chart, now a week from, or was it just this past Friday? Oh my, time flies. It was just this past Thursday and Friday, but especially Friday, I spent a lot of time on the weekly chart. Remember I was discussing the Chapman wave Roman candle. You remember the February of 2018, the monthly candle was a Roman candle, just like it was in the daily on the 4th and the 5th of October. And my rule of thumb with that particular pattern is that if the price within 2 bars starts to trade halfway, below halfway of the lower wick, there's a really good chance that not only will you test the low, but you make a slightly lower low, or you'll get very close to it. Well, the candle this week, after last week's Chapman wave Roman candle, remember I typed this in for subscribers, you know that's what we were looking at. I'll put it right over there. We certainly went below the halfway point, which I think I'd said was 25,200. In fact, what we did is we went zipping down to the 24,368 level. So the rally that we're seeing thus far is really, if you think about it, up 126 points in the Dow, up 22 in the S&P. So the S&P is up 0.85, the Dow's only 0.52% up. However, what's really important about this is that considering it is an oversold bounce, you have to consider that if you're looking at this little candle, all right, we finished with the weekly chart because we've already done that. Let's just close that out. Let's go back to this, make it a little bit bigger so we can see it. Daily chart on the left, middle is the weekly, on the right is the monthly. Haven't even got to speak about the monthly yet. So what we're looking at here is that if you consider that this is a bounce from the low of yesterday, let me write that in 24,368. So if you think about the 24,368 low that was made yesterday and where we are today, up 220 points about, that's nothing. We could have done that. We did that a few times intraday yesterday. It is just nothing, a nothing burger. And because of that, it suggests to me that there's another shoe to drop just in this particular phase to complete the dreaded H pattern. Remember yesterday I showed you the chart, the lowercase h, left side low is really important. In this case, the 24,122 level. See this tiny little candle? That's today's candle. I mean, the day's young. We could do anything. But that was intraday, we had 150 to 200 point bounces. So when I come back to this, I have to consider that we're still in the arch formation of a lowercase h. Let me just draw that in so everybody knows what we're talking about. Come down sharply, you rally. Usually it's an A or a B, and you fail at that A or B. and you come down, and so far we haven't tested the left side low of 24,122. Let me just squeeze this a little bit, squeeze. 24,122. We have made the H pattern. It has gone, when you go this far, you're very close to either a tremendously strong bounce in a successful retest, or you're going down to test it. So this is very poor action today so far. Should be up, right now we should be up 220 with a good series of stair-step moves into the close on the upside. And then a quiet day Friday, no show Friday. I will probably, I'm not sure yet, but I probably will get out at least my Trader's Corner and maybe a Dow chart for subscribers to my opening call. I always like to keep on top of these things. It's just really important for me. The MACD crossed negative. This is going to be real tough to get it back to positive again without a sustained rally. A one-day thing is not going to make it. It's going to have to be a couple of days. Stochastics at 26%. And what I say to subscribers, I'm anticipating that we go to the teens and then probably we get a really serious, more sustainable counter-trend rally from the single digits in the stochastic. We'll see. Meantime, back at the ranch, the weekly chart looks terrible. And you've got, what have we got? Where's my calendar? I keep looking to see where is the first of the month, and I keep forgetting. The first of the month is Tuesday the 1st. So we've got trading days. We've got Friday. We've got 1, 2, 3, 4 days of next 5 days. Should be 5 days of next week. We'll give it 5 days. 5 days, 4 trading days. 1, 2, 3, 4, 5 trading days of next week. No wonder why. I'm sorry, I'm looking at December. I thought this is really weird. So we've got the 23rd. Oh my. We've got the 23rd, the 26th, 2, 3, 4, 5. Friday the 30th is the end of the week. Friday the 30th is the end of the month. Wow, an auspicious occasion. So we've got 6 trading days, 6.5 trading days to go. Can the market get to the 25,200s in that time? Sure it can, but boy, it's going to need some kind of a trigger between now and then. Monthly chart is not looking that good. Still only a rectangle formation, but in the Chapman wave methodology, when you make a cup formation and the price trades from the lip on the left side, 26,616, to the base, 23,344, more than a third to 1/2 lower on a closing basis, which we've done. No, we're about 24,009. We're about halfway. So far this month, we're much lower, 24,582, but the day's young. The month is young. So any close somewhere below 24,800 will say, you know what? There's at least going to be a test of the U-shaped bottom, 23,344. And if that gets taken out, you can expect even lower lows. But I have to do one step at a time. We haven't even broken the 24,100 support. So let's get to the others quickly. S&P right now is trading up 22 at 2664. It also makes the H pattern. If there's a really strong rally in the next 2 days between now and Monday morning, let's say this time Monday, you could get an M-shaped pattern. You could stall it. Remember, stalling is good, keeps rotating. So I'm running out of time here. So let's just do this. The S&P's down 23. We'll do the Qs, the IWM, gold, dollar, the works when we get back. Oh, we all had a bit of a bounce. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back, and I got a couple of questions. I think I'll deal with this technical Friday, so let me just go back. I've got my blank background chart. This has got the Chapman wave projections. Let me just go back to the Dow. I wanted to show you something. So Dow Index. So the Dow had 24, well, let me just get to the daily right here. See, the daily had all the way down to 23,911, and the actual price was 23,911 is probably a worst case basis, with 24,147 was the second level of support on the left side back in October, and we went to 24,122, right? On the right, we've got 24,535, and the low yesterday was 24,368. So it went underneath it. What happens is this becomes a little bit of short-term of a fulcrum. So you could bounce above, you could bounce below, but this 24,530 area is kind of the seesaw battle on the upside and the downside for a little while. So that's on the shorter term. On the intermediate term, I shouldn't go intermediate term yet. Let's just talk about it in the going into next week, right? To the end of November. What I am looking for, so what did I say? November is wrapping up on Tuesday. No, Friday. That's what I said, Friday. I'm going to go through to this. When you're looking at the resistance levels, you have the upper moving averages, and the Dow, I would venture to say that yesterday's high of 24,707, that's going to be key, because 24,693 was the weekly support, and it just broke under it. So how the market handles 24,000, call it 24,700, to not the gap down, but the gap down from a few days before, where the low was 24,787. So now we've got two levels, 24,700s is going to be really important. And that shouldn't be a big deal. 300 points after such a move down to make this M formation. I'm looking at this and I'm saying there's a real good chance that the low that was made yesterday won't be taking a chance. But I'm saying it won't be tested for a short while. In other words, maybe until early next week. First, we have to try to release some of this action to the downside with a relief rally. And if the market and the Dow can hold above the high that was made yesterday of 20 for the gap down high, that is 24,707. In other words, if the Dow is able to even trade for 2 hours in the 24,700s over the next, between this afternoon and Friday, that's going to be very important, because for the first time, you'd be looking at the chance of a retracement in the daily chart that actually can be sustained for a couple of days, because it hasn't done that since it had that midterm big gap to the upside going to the 26,200s. And then I would say to you, you'd be looking at the Dow filling the gap, going to the low of 24,900, somewhere in the 800s to the low 900 area by maybe Monday or Tuesday. And then we've got to think, oh, okay, maybe bad news is about to filter again. That's the way I'm looking at it. At any point, if we take out yesterday's low, 24,368, we're going very quickly down to those lower levels to test the arch formation in the dreaded H. I just drew it in. So that was, and it looks the same thing in the S&P parameters. Yesterday's low was taken out of 2631. Watch out, it's going to go real quickly down towards the 2603 level. I think we're going to try to fill that gap in the short term. So there's a chance that, and today we've already made a nominal new high above yesterday, 2669.44. We went to 2670.73. So I think that there's a chance that we can move a little bit higher. That's what I said to subscribers. Be ready for a bit of a time and price a push to the upside. That weekly chart in the S&P is not good at all. I'm expecting a wave 5 down, and that 5 should take you to below the left side of 20. I think 2590s will be my target on the left side sometime. Maybe it'll be in November. Not December, but November. We'll see. In the meantime, back at the ranch, let's go to the QQQs. The QQQ right now is trading at 161.21. It's up 205, up 1.29%. One of the best percentage gainers here. But it did go to a trough F with yesterday's low. And that's going to be important. The takeout of yesterday's low is really not good. Let's go back to the automated charts. So you've got the Dow. Let me just put the S&P here to catch up with everything. We'll do them all. There's plenty of time. So 2664 is exactly where we are. And 2664 was support that was just completely shattered yesterday. We went way below it. And now we're looking at an attempt to go above it. Once again, sideways. Just think sideways. We've gone underneath the 2664 level. Now we should try to get above it. Now look at the weekly chart. Weekly chart, not very good. Sneeze. My 12, what is it? 1225 sneeze. So, yeah, I think there's a chance that we at least try for that level to fill in a little bit more of the gap, 2672, maybe 2678. Let's go to the QQQ, yeah, and the automated chart. The QQQ, now this is fascinating. 159.75 was the low key support. But in the weekly chart, look, 157.32. What was the low yesterday? 157.13. Hey, I would say that's pretty good automation, right? Chapman automated projections. We went right to the door and then bounced up. So, and maybe we even get by Friday, we get a Chapman Roman candle with the close somewhere in the 150. No way. Is that a 62? No, that's a little much. 160. Well, let's just say 161 to 162 would make a Roman candle at the low end of the spectrum. That gives me a whole bunch of things we could talk about next week, but let's just deal with one thing at a time. And 156.82 was also a low support, and now we're rallying. Most importantly, what I am looking at here, and this is going to be important, is within the context of the Qs, we took out the low of the 29th. And now, and look, we took out the low. We closed below it. We closed at 159.16. And 160.09 was the low that it shouldn't break. So now that you've had a close below it, it says that now look at the right side and look for a moving average or a gap or a peak And that's going to be your first real strong resistance, 164.68. Oh, there's your 164s. Oh, maybe we can. I don't know. That's a tall order, but that's what I'm looking at right now. So most importantly, the weekly chart MACD is just horrible. So I'm going to go to. I think I've got a. Let me get out of this here. 1 second. 1 second. I did hear some noises there, so I got it. Okay. We have, yeah, I bless you. Thank you very much. I bless you. We should get that automated at 12:25 every day. So look at this. Underneath the 9-period moving average, the green line in the monthly in the Qs. Underneath the 14-period moving average of 165.25 in the Qs. Whoa, this doesn't look so great. So IWM, let's do the IWM. I want you to show you crude oil because of the automated. IWM, really nice, up 2.06%, up 3 at 149. But really not a great chart pattern at all. But funnily enough, the actual pattern itself in the weekly chart is not too bad. Got a minute Roman candle. I'll be back straight after these messages. Dow's up 125. Basil Chapman, Tiger Technicians out.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm just drawing in the arch formation of the IWM. The MACD is very poor. The stochastics actually rallied quite nicely and holding quite well at 26%. But if the IWM at any point in the next 3 sessions, Friday, Monday, Tuesday, not today, the next 3 sessions, starts to pull back and it takes out the support. The low today is 146.53. If it goes under 146.23, That's what? Oh, that's that's 3 points from where we are. Well, if it does that, that's going to be very negative. I think there's just enough strength to have a bit more of a bounce. Now we're going to go to gold. Gold is trading right now. It is trading at 1226.8, up 5.6. A very quiet move to the upside. The MACD is just about to cross positive. The stochastic is rallying at 61%. This is very important because within the context of the weekly chart, can't be confused by the daily, because the daily has had a bunch of ups and downs within a range, within the 1244 to, let's call it, the 1195 area. However, within the context of this, if you look at the chart and keep your eye on the left, look at the left side. Oh, sorry, keep your eye on the middle chart. That's the weekly. Here we go. What does this say? Keep your eye on this chart here. This chart says, uh-oh, this is an H pattern. They went to a lower low, closed above it, and that says you could rally to the next moving average of importance, and that in this case is 14.54, the 9-period moving average, and then the 14.69, and the MACD and stochastic are improving a little bit, but not that great. This is silver, and silver's still in a single leg A. It's just managed for 1, 2, 3, 4, 5. Even though it had a big red candle yesterday, it still made a higher recovery high. And today did that again. Nice action. The MACD crossed positive. Stochastic is at 47%. It's okay, it's not great. So what happens this coming week is going to be really important. And now we're going to go to the crux of the matter. The dollar, the DXY is trading down a little bit, down 8 cents. But it, rather than the weekly chart of gold, which made that lower low and is trying to trade in its lower range, the dollar is up in the upper range. And I say that it could be, if there was a takeout of the 95, I think 77, yep, 95.77 level in the weekly chart, there has to be what's called the Chapman wave flat base restart. Now, I started talking about it about a week ago, and well, at the beginning of this week, and I don't want to elaborate on that because the dollar is acting pretty darn well right now, and I'm still going with that C with a D to come, with the alternate count possibly the pink big letters right there as a D that only kicks in. This big fat A, B, C, D, that only those big uppercase alphabet letters only kick in as being the predominant Chapman wave count if there is a close under 95.77. So we're at 96.77 right now. That's not counting yet. This is still with the first count of a C that could possibly go to a D. Oh, good. Okay, got that out the way. Now let's see. So the dollar is trading at 96.77, down 5 cents, 5 pips. And we're looking at the EUR USD. Euro is trading, so up a fraction, up about 0.001 at 1.1386. It's just stuck in the lower range. And the USD JPY, this is Japanese yen currency pair, is trading up 0.29. This is not bad, but I don't know, that count was a gray peak C in the daily. It's just stuck in the range. Remember, I drew the rectangle, stuck in the rectangle. All right, so now what I want to do is I want to go to my automated counts, and I want to show you something. Crude oil, this is the continuous contract. Look at this. What was the low yesterday? The low was 52.77. The automated, look, there's nothing from 65.09. There is not a single automated Chapman wave projection until it says 52.59. Not bad, huh? And we got this huge red candle, and we've got an inside bar today, about a halfway recovery, and the 10-minute and has 56.27 as resistance, and we've taken out the 54.82 120-minute chart resistance. Now this is going to be interesting. Look at the monthly. The monthly at 77.62. What was the high of crude oil? 76. 90. Peak F of the weekly. And 76 peak E in the monthly. I don't see any way that it's going to go above 76.90 in crude oil over the next 7 trading sessions. So I think this is a peak E. MACD, I haven't got a down arrow because the MACD hasn't crossed negative, and the stochastics just now, it's 78, just under 80%, but the daily and weekly charts are really tough. Now look at this. In the weekly chart, I know I've got a lot of questions, and I'll get to them in a moment. Look at this peak D top that went all the way. I'd drawn this in a little while back, drawn this as support level, and that takes you all the way to where? It takes you almost the low of 52.77 was taken out and took out that trend line by a fraction, and now we're above it. The MACD and stochastic in the weekly chart are really poor. So isn't this interesting? A single leg A to the downside. Maybe next week we actually make a trough A because crude oil rallies a little bit. But right here is where we at trough F. We got that support. MACD's attempting to turn up, but it's really the first stage. Stochastic's been rallying for about a week and a half, and the on-balance volume is rallying a little bit. Stochastic went from single digits, lousy single digits, into the 14% area. It's a start anyway. Okay, let's get to the TLT. TLT, Lehman 20-year T-bond fund, middle of the week. We're doing this kind of a recap, mid-cap, over-cap. Made a peak C. Oh, yeah, peak C because that was a brand new rally. In the TLT, it's at 114.74, just stuck in the range between 115.70s and 113.20. We'll see where the yields go. I got a feeling the Fed's going to start saying some nice things, and that could come about fairly soon. We'll see what happens there. I think I've covered just about everything. Okay, questions. XLI is trading up 82 cents at 70.20. It's the H pattern going to a lowercase m pattern. Not very good. Better hold 70.93. Resistance at 70.93 and support. Better hold in the 68.90s if there's a sudden turn down. Yes, Eagle is a dry bulk shipper. EGLE doing nicely. I spoke about this yesterday. Ben had spoken about a NAT, and I said, yeah, but I prefer just on the shorter term. Crone was the one that looked like it had a bit of a rally going, but now I see the shippers are rallying, so treat it as a rally, a short-term rally. Remember, they came in late to the whole cycle, and that's what you're seeing here. Eagle, EGLE, up at 471, up 34 cents. Question about the XLP. Yep, we'll do that in a moment. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, just on a short-term basis to let you know that the E-mini at up 27 at 2667. I've actually, in all the years, in the hundreds of thousands of charts that I've notated, I've never seen all three time frames. In this case, the 2-minute chart, the 5-minute chart, the 10-minute chart, as if it was a daily, weekly, monthly, go to a peak C1, C2 in the Chapman wave methodology, which is an exact top or just under an exact top to make the D, but it's an artificial count because the left side C1 is usually the higher one, or there's a parallel count. So I can't put a down arrow. So it goes with a red plus sign, and then all of a sudden you see a drop. And it went from the 2672 area, was it? 2671 round number high, and it pulls back to 2663. Now what's going on in the 5-minute chart, you got peak C1, C2, and in the 10-minute chart, you had peak C1, C2. Interesting. Just wanted to mention that. Oh, parameters to watch under 2658 at any point today. That's very weak action. You can expect just a very weak, hesitant close as everyone's nervous to hold over the Thanksgiving, kind of the weekend, because a lot of people won't be able to actually trade on Friday. And if there's a push above 2673 by this afternoon, that'll be good. That'll be a good sign because it'll say, hey, could have followed through upside where nobody's watching on Friday instead of one of those 500-point down days. So here we are. Crude oil gives the exact low. Question about Goldman Sachs. Yep, Goldman Sachs is trading right now up a little bit. It's up. Oh no, it's more than a little bit now. It's up 3 at 194.35 or 1.57%. And it's got a ton. Look at these 10-minute chart. Look at those bars at 194.54. A lot of resistance to overcome. If it does do that in the next couple of days, it might even fill the gap and try to go to 196, where the last support level was before it plummeted through there. And 190.25 is the weekly automated low of the support levels. And lo and behold, where did we go? We went to 190.35. 10 cents lower was the projection. I'd say that that's pretty good handiwork. Good, thank you, thank you. So that's Goldman Sachs. Oh, XLF, we want to look at the XLF because the XLF, in fact, it's really important that the XLF doesn't keep tanking like this. It's up 30 cents at 26.49. I shouldn't say tanking, just being very weak. I want to see the XLF in the 28.30 area by the first week of December. If it does that, I'm going to say, great. That's a very important first step in a recovery process. A new low in the 24s, I'd say, not good action at all. All right, so now we want to, that's the financials. XBD, oh, I haven't looked at the XBD. XBD is the broker-dealer, where is it? Here it is, broker-dealer ETF. I'm going to go to the real thing. I wonder how much I've notated lately. Sorry. As I'm going there, I have the XLP on this white background. XLP is the staples. This is the S&P Consumer Staples Spider ETF. Makes a round number 57 high on the 9th of November, and it's pulling back. It's at 54.69 right now. This is not a good sign. Peak D in the weekly chart, a leg A in the monthly, gray A because it's way under the all-time high that was made at 58.95 in January. So this is like the Dow made its high in January. This made it high, but it's never had a recovery high after that. So this is something to watch really closely. Why? Because if the 53.78 200-period exponential moving average in the week and the daily chart is taken out, that means that there's going to be quite a bit further to go to the downside. Question is XRT. I want you to do the XRT because that's the S&P retail. Made in the dreaded H pattern. It went zipping right through the low of 45.52 made in the 26th of October. Yesterday's low was 43.76. Trading right now up $1.25, high of 44.93. Trying to fill the gap. Hit exactly the 200-period exponential moving average in the weekly chart. Woohoo! This is going to be important because this monthly chart looks like it's a peak D. MACD hasn't closed negative. It's pointing down, but the daily and weekly stochastics are suggesting that it's got an upside resistance that is going to be very strong, all the way to the 46, 40, 47 area. If it gets to 47.80 by the first week of December, that's good action. But so far, the XRT and the RTH go together, and they are not doing very well at all. So that's a big problem. Next question is comp index. Comp index. Have I updated that? I think I did. Yeah, peak E back in August. And then a leg F goes to peak F of 3 months. It's at lower highs, much lower highs. Yeah, this is the same thing. Comp index is also suggesting much more time is needed. Oh, look, almost a Chapman wave Roman candle in the lows. Okay, the rule is in the Chapman wave Roman candle after the major top is pulled back, when you're getting towards lows, potential lows, even if it's just a bounce, but I mean, you're now making lower lows and lower highs, and that whole series. This says that if there's a close Friday, even just a little bit higher, it's at 7,017, up 108. Good move. Not after yesterday, though. If there is a close above 7,040 on Friday, and then the following week or two, there's actually a close above the high of this week, 7224.12, and it can do that for 2 consecutive weeks out of 3. Not once and then a gap and then another. It has to be consecutive. So it could miss 1 week and then 2 weeks to go higher, or 2 weeks up and the next week down. That's going to be saying that it has used up a lot of price. Now it's using up more time, but it could rally a little further before coming to test the wick low that was formed. All right, that's that. J&K, up J&K. And thank you. I got a number of people sending me a bunch of what I like to look at. This is the socio-political aspect of the market, and it has to do with skyscrapers and all sorts of things. Yep, London's just building another skyscraper, one of the biggest. This all goes together. And the question was, hey, is this then the top after all? We are starting to see major buildings. And I'm saying, I just don't see it. I think there's another series of all-time highs to come, and you might have to wait, but that's what I'm thinking. Question I had here was what? Okay. Oh, transportation index and the IYR. The transportation index should be having a nice rally. It's up 3 at 187.12. The ETF, IYT, at 187.12. It's okay. It's just bumping. The high today of 187.88 bumped into the 9 and the 14-period exponential moving average resistance. I see this as an H that probably going to an M, but I see it going to the 181 area to 179 sometime pretty soon. So I'm not that impressed yet. with the transports. The IYR, as we're about to go to our final break before the Thanksgiving weekend. Yes, we went to an F with that long-legged doji candle. Oh, I'm going to do a little bit of work on this when we get back because it's still holding really well. I don't know if it can break to the upside, but yeah. Thank you for those email me with thanks. Wonderful Thanksgivings. Back at you. Have a fabulous Thanksgiving. I'll be back straight away.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Dave White, another terrific analyst. And, we've got Mike in Ormond Beach. What is the best sector to take during this market correction? Mike, are you there?
Yes, I am, Basil. I just wanted your opinion of what you think is the best sector to be looking at after this correction is done that can have the greatest move up after this correction is done.
So there are three sectors that my eye is really focused on. Number one is the dealer-broker area. I think if we're going to have a rally of substance, if we're going to have a rally that really has legs to the upside, I think that's an area that should actually either lead the way, follow, or at some point start to take over as leadership. And that doesn't include Goldman Sachs, because as a broker dealer, I'm really looking more at the brokerage companies. So that's something I'm looking at. I'm looking to reinstate buy signals in United Technologies and Triple M, that category. It might include Caterpillar, it might include Deere. I'm not sure just yet. It should, but I don't know if it will. And then there's going to be a sector of the stocks that I've been monitoring for my Traders Corner, for my subscribers, where, for instance, there's one particular stock that I'm looking at that is held. It's high-tech-ish, but it is held extremely well. So it's the stocks that if you got a sieve and you got all your little grains, what falls through and what stays, the stocks that have held the best, if they actually participate in any major turn that we get to the upside and show they've got leadership, they've got to lead right away. If they do that, those are the stocks that should go on to either test or to break to all-time highs. So I'm trying to build a list. This is a fantastic time to be building the list. And it will include, I don't see how you cannot include the stocks that have been absolutely fantastic, the Googles, the Amazons. Which ones is going to be the question? Hope that answers your question. And for the crude oil question that I got just a second ago, crude oil, this is just the start of a bounce, but if you use the USO, I think 1240 is the resistance. It's at 1173. Hey, have a wonderful Thanksgiving, Mike. Thanks for calling. Everyone, have a great Thanksgiving. Stay tuned for Steve and...
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading News.